If you're looking to buy in 2024, you might be excited because the rates are coming down. The Fed is expected to lower rates 3 times in 2024. However, I'm here to tell you that when interest rates drop, it's actually bad for home buyers here in the San Francisco Bay Area. I'm Kevin Peterson, your local San Francisco Bay Area realtor, and in this video, I'm going to show you that the longer you wait can actually cost you more in buying your home. Let's imagine your monthly mortgage payments that you can afford is around $14,600 a month, or a $2 million mortgage at 7%. If interest rates then dropped to 5% from 7%, your mortgage payments $14,600. That enables you to afford a $2.45 million loan, or in this scenario, going from a $2.4 million purchase to a $2.85 million. With a 2% drop in interest rates, that helps your purchasing power go up $450,000 in this scenario, or 22.5% more home that you can afford. If we look across the Bay Area from the Peninsula to South Bay to East Bay, excluding San Francisco, being that it's a slightly different market, the vast majority of single-family homes sold are between $600,000 to $1 million, 1.2 to 1.4, and $2 million to $3 million in 2023. And compared to 2022, the 600 to 1 million, the 1.2 to 1.4, and the 2 million are also the same, the highest ones sold in the area. Same with 2021. In 2020, the 2 to 3 million was much lower, but also one of the most sold. 2019, there was less of the 2 to 3 million range, but way more 600 to $1 million range. And this is 2018 data showing, again, the 400 to million are the most number of homes sold in the Silicon Valley area. The 1.2 to 1.4 are the next, and then the 2 to 3 million are the final. So when we look at the whole past 5 years, the total inventory that was sold, the highest numbers are between 600 to 1 million, 1.2 to 1.4, and 2 to 3 million. When we look at the highest inventory that was sold over the last 5 years, between 600,000 to a million, 1.2 million to 1.4 million, and between 2 to 3 million, we see that the sales to list price ratio was below asking to as high as 106% over asking, or 6% over asking. We started to see a decline here as of September when interest rates started to peak at roughly 8% in October. How does that compare to 2022? You see, as rates took off in the middle of the year, we started to see days on market going up while list to ask ratios coming way down, basically accomplishing what the Fed had set out to do, reducing the inflation in the housing market. And here's what 2021 looked like 1 year after the pandemic. We saw that list to ask ratio was shooting up through June, with days on market bottoming out in the spring and summer time frame. As we can see, rates were fairly low in comparison to today's market. So if we zoom back over the last 5 years for these 3 price points that are sold the most inventory, we can see that the list to sales price maxed out in April of 2022 at 16% over asking, when days on market were the shortest at only 12 days. This is from San Mateo to the Silicon Valley and East Bay. If we look at April 2022, interest rates were roughly 5%, and the stock market was starting to crash, which then resulted on average days on market shooting up and list to sales price going much farther down. What we anticipate in this next season, days on market are going to start to drop and list to ask is going to shoot back up again as interest rates drop back down. So in summary, the 3 price points that will be the highest demand are the 600,000 to 1 million, 1.2 to 1.4 million, and 2 million to 3 million. As such, you'll experience a higher list to ask ratio and shorter days on market when interest rates drop, ultimately pushing up prices. What we're advising all of our clients to do is to really start looking now, talk with your mortgage lenders, get your pre-approved letters together, and figure out what price point you qualify for. Check out the inventory and really get familiar with what it is that you're looking for. If it falls in those price points, be ready for some high competition in the spring and summer. If you can buy something now, you can lock in your home and then refi later as rates drop. And that's your real estate update for this week. Thanks for joining me, Kevin Peterson, your local San Francisco Bay Area realtor. If you have any questions or concerns, reach out, let me know. Until then, happy house hunting and good luck.